I scored 100 on 100 in my 12th board exam. I was from ICSE ISC board, which itself used to be a big deal. All my teachers, relatives, and friends were 100% sure that CA it is. I remember one of my uncles telling me that about a career in the stock market, and guess what I replied to him? Wait, isn't that too risky and somewhat unethical? Yes, those were my exact words. But anyway, I left accounts for life and chose economics as my career, which is basically a disguised math course. So you might be wondering, where does the stock market come into the picture? How exactly did I pick stocks? How I ended up creating content? What's my psychology towards money investing? And why just 3% Indians invest in the stock market? Like, what's stopping them? What exactly went wrong? Where did it go wrong? Sounds like a lot, right? Well, here we go. I hail from a business class family, and since childhood, the dinner table talks in my family has been around business, interest, money, and we what call it in Hindi, munafa, the profit. Despite all this, I never exposed myself to the stock market. Instead, I grew up hearing all my life that it is a gamble, it is risky, and that it will make you go broke. I still remember hearing lines like, only institutional investors can earn in this market. If you're a retail investor or a small investor, you will always end up losing money, 100% no matter what. I'm pretty sure that at this point, a lot of you can relate with me. Well, naturally, I never paid attention to the stock market. And because of all of this, I can't tell you how much I regret. Well, fast forward to the lockdown, pandemic, coronavirus, the final year of college exams got cancelled, too much free time, the world almost paused. Surely, it was a challenging time and the world faced something really harsh. During this time, I came across this book, and I'm sure you have heard about this book, but yeah, it's cliche and it's one of the best things that ever happened to me. The book's name is Rich Dad Poor Dad by Robert Kiyosaki. And coincidentally, around that time, one of my friends from college just hit me up and we were, casually talking about things, like how things have been going on in the middle of the lockdown. She just told me that she has been trying to, earn and, learn new things. And one of the things that she was studying about was the stock market, just, out of curiosity. She added that she is finding it really interesting and that she had invested in some 2, 3,000 rupees as a start and was already in 5% profit. So simultaneously, I was very intrigued and I started reading this book and asked her to share some resources to read about the stock market. And once I started, boy, I couldn't stop myself. The book was a good read. It was 350 pages. And I believe I completed that book within like what, 48 hours. And just, my mind blew up. I acquired new information, most of them which were never told to me as a child, which were never taught either in school or college or by any friend, relative, or even my parents. Within a few months, I learned extensively about things like passive income, which is income that requires minimal labor to earn and maintain, one of the most important components to long-term wealth generation. For example, if you have a property that you have leased on rent, then you are earning a passive income in the form of rent. I also learned about the importance of investing money, the story behind risk taking, and how one can take charge of the money and grow it. All of these are fundamental things which literally every individual should be aware, in my opinion. Two things happened. One, I knew how I had to take the essence of investing, passive income and stock market. And second, it was like a domino effect. The moment I finished the book, I ordered 5, 7 more books on investing, money, stock market. I read 18 heavy books in just 4 months. And by the way, some of my recommendations are The Psychology of Money by Morgan Housel. Best. It's like very good. Beating the Street by Peter Lynch and The Warren Buffett Way. All are great reads, and I really love these books. Anyway, this time I was reading and getting to know more about the stock market and how exactly it works, watching, YouTube videos, talking to people who already know about this field, and I just went crazy. I realized that I was missing something extraordinary in my life, and now probably it is the time to take charge and at least get started with it. So, guess how much capital I started with? 10,000 rupees. Yes, that was my first investment in the stock market. Reading financial news, waking up before the market opens, and sticking to the screen till 3:30 p.m., missing the stock markets on the weekends became my life around that period. Now, let me teach you something very early. Only while I was, reading and learning about the market, I actually tried to figure out who I would be, like an investor or a trader. People do not realize the difference between the two. You cannot be an investor and a trader simultaneously, in my opinion. There are two different boats. An investor is someone who buys a stock to hold it for a long period of time, a long-term player basically. While a trader is someone who buys stock for periods of like ranging from a few seconds to some few weeks. Trading is a full-time job while investing can be done on the side. Many people try to sail both of these boats and they end up nowhere. They end up broke. They use the psychology of trading into investing and psychology of investing into trading, which are miles apart. Trust me. Healthy advice, please do not implement that. Decide who you are, what your goals are, your knowledge, your risk appetite, and your schedule, and choose your side, investor or a trader. So basically, I chose to be an investor due to several reasons. First, not having the risk appetite, because come on, risk taking and trading goes hand in hand. Secondly, schedule. I did not want to commit myself to the stock market full time because it was too big a gamble for me then. And economics was one thing that I wanted to pursue in the long term. And today, here I am pursuing a master's in economic policy, which is no way near to the stock market. Third, skill and knowledge. Options and futures, chart patterns, I learned it all but never found it very intriguing and very soon discovered that it's just not my cup of tea. Now, about investing, frankly, it is not rocket science. It is not as technical as we are told to. My approach is very simple, and I assure you it works. It has worked very well for me, and I'm pretty sure it will work for you as well. Just look around your room. Like wherever you're sitting, in your room, in your hall, in your living room, probably a library, just look around. You will realize that we are surrounded by an assortment of various companies, from your clothes to your watch to your sunglasses, your phone, your laptop, your shoes, whatever you eat, everything comes from a company. And behind every company, there is most probably a stock. If you're a happy user of that particular product, if you understand how the business of that product works, try looking for the stock of that company. And I'm pretty sure, in most probability, you will find it. Now, you need to have a basic idea of how to read the financial statements like the balance sheet, cash flow statement, and the profit and loss statement, and certain ratios, and you are good to go. Trust me, it doesn't matter where you come from. You can be a doctor, engineer, lawyer, anybody. It doesn't matter. If you don't know, if you don't even have any accounts background, reading financial statements, it's not technical. It's not tough. It is relatively very simple. And it's just a, one-time thing. Once you learn it for life. And trust me, it's totally worth it. One of the foundation principles of investing approaches is to never invest in any company or business that you don't understand. It is like buying a medicine without knowing its purpose, right? So you don't want to do that. And that's what I firmly believe in. So coming back to the story, in a couple of months, I increased my exposure to the stock market by reading the news, tracking everything until there came a point where I was bombarded with information and news every day, which I realized that generally people and the public aren't aware of. It could be due to their reluctance or probably ignorance. But after talking to a lot of my friends, relatives, and just colleagues, I noticed that these people aren't aware of some basic terms and facts which everyone should know honestly. That is where the idea of content creation came in. I wanted a platform where I can impart this basic knowledge, familiarize people with important terminologies, share news with the general public, and contribute to persuade people into investing their money and making them financially literate. And honestly, my friends were just tired of listening to me talk about finance, money in the stock market. They were so sick of me. They were like, dude, we don't want to talk to you anymore. So I really needed a platform to, impart my knowledge. Since then, I've been making content regularly. I have created more than 150 videos, hosted live sessions with more than 15 other content creators. And I've come a long way from 0 followers on 4th January 2021 to around 29,000 followers on Instagram today. I also authored an ebook called Master Fundamental Analysis in just 20 minutes, which has been bought by some 250 people. I came to the United States chasing my dream of a career in economics, doing a master's in economic policy at Boston University. Writing that ebook was a major challenge for me because I had to stick to the very basics and had to ensure that it is easily understood by anyone, irrespective of their academic background or their professional background. It took me weeks to draft the content and then design it, but it was all totally worth it. Nowadays, I'm trying my luck with the US stock market, but still I'm sticking to the Indian market because that's where I master. My sleep schedule is all messed up because it's like 11:45 in the night when the stock market in India opens, and I sleep around what 2 or 3 after seeing the action and the news and the trend. And by the way, the US market and the Indian market, in fact, every stock market in the world almost works on the same principle and rules. The only difference is that the drivers, which are the companies listed, the different companies are listed on every different stock market. And the factors that impact the markets are a bit different. It's like, more focus on the news in that particular reason. Now, you might be wondering that if it's that simple, the journey in the stock market, investing money, then why just only 3 or 3.5% Indians invest in the stock market? What is stopping the rest of them? What is stopping people like you and me? Well, the answer is relatively simple. And I believe that you might be experienced that too. Certainly, I did as well. It's a misconception. Since childhood, we are taught that the stock market is something very technical, something very risky, and a bit unethical. You might know at least one relative, one uncle, or that one person who went broke because of the stock market. And that one single person who scared and scarred us for life. And trust me, he didn't lose his money just like that. He lost his money 100% because either he was being exceptionally greedy and taking too much risk, or following a tip without doing his own due diligence, or just purely gambling. There's this very famous quote in the stock market that the person who wants to get rich quickly generally ends up being broke the quickest. Another reason why we Indians generally don't invest their money into the stock market or mutual funds is the lack of financial literacy. We are never taught anything about money, investing, taxation, the essentials of life in school or college. Never. Yes, we all studied Pythagoras' theorem, trigonometry, Shakespeare, but majority of us don't even apply those things in our daily life. But what we did not study is investing money, stock market, taxation, growing your money. And there we are having very tough time. And at last, we were taught since childhood to put our money into one of the favorite tools of our parents and our grandparents' generation, that is investing into FDs. For example, an average FD in India pays an interest from 3 to 5 to 5%. And inflation in India is around 6.2%, which is the measure by which things are getting costlier in the country. Now, 100 rupees today will not be worth 100 rupees in the coming years, right? So additionally, you have to pay taxes on the interest that you earn from FD. And if you happen to be someone from the 30% income tax bracket, then technically on a 6% FD, you only get 4.2% interest while your money is eroding at 6.2%. Interesting, isn't it? Now, let me give you a very good practical example of investing. I'm not going to give you a stock tip or recommendation because I'm not supposed to, but just to give you a direction to think. As you know, to buy and sell stocks, you need a broker, right? And there are quite a few brokers in India now who have been capturing the market. So, day by day, more and more demat accounts are being opened and more people are entering the stock market. So this number of just 3.5% is increasing at an alarming rate. Now you will ask, what is a demat account? A lot of you might not be knowing. So it is simply an account that you open with a broker in order to buy or sell stocks. It is the account where all your stocks are stored. As more and more accounts are being opened, these brokers are earning more and more, as simple as that. Now just imagine, with the ever increasing population of a country and people getting more and more financially literate every day, India has such a big scope for this demat account space. There are still more than 96% of Indians who don't have a demat account and who have never invested the money in the stock market yet. Even if you deduct literally 50% of this, saying that people are poor, they will never put their money in the market, you will still have crores and crores of people who will one day open a demat account and start investing. And therefore, you can start looking into the shares, these stocks of these big brokers who are present in India, and analyze which will be the winning one in the long run. And in terms of business, and there you have a multi-bagger, and there will you can earn 100, 200, 300, 500% returns in the long run. This was a typical example of how you can think like an investor. It is that simple. You just need a basic approach, a basic observation, a basic understanding. Just look around, just analyze things, just notice things, and just be patient. And whenever you are in doubt, just talk to someone. Trust me, that always helps me. So in my opinion, even if you are that someone who has been making these mistakes of investing your money in FDs, or not investing in at all in the stock market or mutual funds, or not getting financially literate, and sticking to rumors that you've heard about the stock market being a speculation, a satta market till this, trust me, it's never too late. Remember, money does not buy you happiness, but lack of money certainly buys you misery. I regret that I started so late, but I'm proud that I started. And that's the most important thing. The world's greatest investor, Warren Buffett, says that he started his journey of the stock market when he was 12 years old. And he regrets that he started so late. Just imagine. So now is the time to make the difference. Get out of your comfort zone and take the step towards being financially independent, or at least financially smart, and take a step of financially smart future. I would like to end with one of my favorite quotes. How many millionaires do you know who have become wealthy by investing in saving accounts and fixed deposits? I rest my case. Raj Abhisar Agarwal signing off. Thank you.